Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Silver is the new gold, and now is a good time to buy. Couldn't be worded better. This link will be in the description. It's from barons.com, and it's talking about how silver is outperforming and outpacing gold and everything that goes along with this subject. So before we start, make sure to smash that like button, subscribe if you're new, because I post daily videos. So it starts off to say, if silver prices have fallen 9% from this year's highs, an opportunity for investors to buy the metal that has outperformed gold so far this month. If you are bullish on gold's future prospects, silver is going to provide you with an upside leverage with relatively low risks at these price levels. So, that's extremely true. The industrial demand for silver is going up, and they are paying premiums, which does not happen. It's extremely rare, and it's showing. Now the surplus is finally showing or exposing the truth behind the silver shortage and what that's going to do to prices. Silver futures settled at $17.80 an ounce on Thursday. It's down 9% from the $19.54 settlement on September 4th, the highest, most active contract finish in almost 3 years. Silver's trading 4.7% higher so far this month, while gold has gained 2.2%. So silver is doubling or outperforming gold by more than double. Silver prices are catching up to gold's rise this year, trading 14.6% higher versus gold's 17.4% climb. Similarly, the iShares Silver Trust Exchange Traded Fund has climbed 14.7% year to date compared to the SPDR Gold Shares ETF's 16.7% rise. So the silver price rally that began in May pulled the gold to silver ratio away from its highs in the 90s. It was actually around 95 to 1, while long-term average is about 65. So that's true because the gold to silver ratio is a great indicator on where prices are headed or which metal is the better investment. When it's 95 to 1, that means the gold is outperforming silver. But when it's lower, when it starts to go down, where it's around 84, 83 to 1 right now, that means that silver's over or outperforming gold. So you can use the gold to silver ratio as a great tool, a great way to measure which is the better purchase at that period of time, which is really important if you are someone who invests into both gold and silver. You can also use the gold to silver ratio to your advantage to either earn free gold or free silver by simply trading once the ratios fluctuate. So anyways, Thursday's price, it would take about 85 ounces of silver to buy 1 ounce of gold at $1,504. That's down from a summer peak of roughly 95 ounces, which I just mentioned before. Weeb says that silver prices could potentially see highs above 20 next year, but warns unless we see some systematic risk creeping in, I'm not convinced silver move an awful lot more this year. And they're talking about the geopolitical fears, U.S.-China trade negotiations, Iran tensions, the Hong Kong protests, the Federal Reserve cutting interest rates, FOMC meetings, stuff like that, stock market volatility, stuff that brings panic or that makes people uneasy in the economy. That's really what drives silver higher, because they look at it towards a safe haven investment, and that's what they invest into to kind of protect themselves against the dollar collapsing or any fear of the banks or government. So here's a chart that it's a Dow Jones Commodity Index. So it's just showing, where precious metals is the blue line, which is going over all other commodity futures, and this is soft. So in the meantime, silver fortunes continue to be tied to that of gold. Gold is clearly seen as the asset of choice for investors looking for shelter from market concerns, talking about safe haven investments. That's from Stephen Dunn, head of exchange traded funds. So still, gold futures positioning has risen to an all-time high, so some investors are naturally rotating to silver, where prices are less stretched. And this is true because most people that get into precious metals, they find gold first. Gold is, they see gold as king, gold is the royal metal, and they usually get into the precious metals from gold, but then they hear all this talk about silver. And silver's the undervalued. Silver has more potential. Then they actually start going into silver. That's how most people from the newer age that finds precious metals, that's how they get into silvers from gold. Actually, gold's kind of like the mascot that really brings these people in. So Silver is also finding support of its own, and this is from the industrial demand. But anyways, the renewed international demand from venues such as China and metals in early stages of renewed long-term bull market, and prices can breach $18 before the year's end and reach 2025 during 2020. Global silver demand rose 4% into 2018 to reach a 3-year high at 1.03 billion ounces, while global silver mine production fell for a third straight year by 2%, 855 million ounces last year. Silver production fell 855 million ounces last year. That's what, by 2% to 855 million ounces. That's what I'm saying when I'm talking about the supply not being able to meet the demand. For the last several years, silver production has been getting cut back by the hundreds of millions of ounces. Mexico, Peru, and Chile, the biggest precious metals producers, have been abandoning silver mines. So demand for silver is growing. Look, the demand rose 4.4% for a high of 1.03 billion ounces, but the supply is diminishing. Do you see what that's going to do to prices? Low supply, high demand shoots the price up. That's investing 101. So when is this really going to push prices higher? When the shortage really starts to creep in. So anyways, primarily silver producers needed prices in the upper teens to lower 20s for their mines to break even. See, these miners aren't making profits. That's why they're diminishing. They are focusing on the dollar, whatever makes them money, and gold is what is making them money. So, leading companies to diversify with other precious metals focus less on developing their silver properties, as Silver Seeks, Spina says. At the end of some time, exploration has taken a major hit in the past few years. That point to a tight supply market, which I've been explaining and talking about for several months now, and it's finally starting to catch up to us. I've been talking about this a lot because I knew that this was going to happen. I don't want to say I told you so because a lot of you guys know as well. But this is going, and this is just the start. This is just the start of it. We're finally starting to see some results or the consequences of them not being able to fill the production of silver when the demand spikes. So now is an excellent period to build positions on weaknesses in silver. That is so true. And buyers can watch the gold price and use it as a guide for hints on when to buy, which I just explained previously as well. If gold breaks the $1,550 area and heads to $1,600, $1,700, silver is likely to run up to $21 to $25 pretty quickly, because silver is gold's little brother. Silver usually catches up to gold slightly after. It's like it follows suit usually a couple weeks or a couple months after. So that's a great tool if you want to see where silver prices are headed. Look at gold. But when is silver going to start having its own market, not having to rely on what gold does? That's what I'm curious. I think the supply and demand is going to push that into action much sooner than later. But when is silver going to have its own market by itself? I think people still need to start differentiating between silver as an asset and gold as a commodity, because a lot of people still have it flipped. A lot of people still think gold's a commodity and silver's an asset, or vice versa, gold's an asset and silver's commodity. But silver's not used mainly for jewelry and necklaces like gold is. Gold is usually made for necklaces, jewelry, earrings, rings, stuff like that, bullion. Silver is used highly in technology, in the industrial world. So until we start to understand that and separate that, we're always going to be looking at silver from a shorter perspective. We're not seeing the bigger picture and where prices or the consequences of our actions could really take us. And this is extremely serious because a lot of gold is remelted. Gold is remelted, reused, rescrapped, recycled. But silver is lost in technology. So a lot of silver that they think they're going to be getting back in circulation is actually not going to be coming back at the rate that gold is, which is extremely important to take note of. But anyways, I'm going to wrap this video up here. I really hope you guys did enjoy it. I hope you guys are starting to see the consequences and start to reap the rewards and the benefits, and hopefully you guys are getting into silver right now because it is definitely the most opportunistic, most highly potential purchase that you can make, the best investment you can make for yourself for the future. If you guys know what I'm talking about, then you guys are probably already on board. If not, then just keep researching. Check out some of my other videos. I'm explaining deeper into these prices, what's really going on in the world of precious metals, and why silver more specifically is such a prime focus on this channel and on so many other channels as well. But anyways, like I said, the link to this article will be in the description if you want to check it out yourself. Thank you guys so much for tuning in. This was Silver Slayer. I will see you guys soon. Peace.